Hello out there and good morning, traders. It's January 31st, 2024, and welcome to the Apteros Daily Market Insight. So, going over yesterday's DMI, we had a line in the sand up above here that was looking to be bullish in nature because of the acceptance picture. And then if we ever got down below it, we were going to switch to that bearish view with a traversal down into this zone here. Now, we talked, a little bit more about this zone down here as being a little bit more bullish if we ended up coming down here and holding. And that's kind of the overall outlook of what we were talking about yesterday in the DMI. So how did that all play out for us in terms of planning and prep and so forth? One of the reasons why we have a rule called stick with what is until proven otherwise is for a situation just like this. We had a line in the sand. The what is picture was that it was bullish in nature, and we went rotational on the session, but our rotational lows were essentially right at our line in the sand. So we got some good movement and rhythm out of that particular line in the sand, but we ended up going nowhere. These highs here just kind of contained price for us. Not much there in terms of references or anything like that. It was just one of those situations where we don't get the energy that we need to possibly go in balance and continue to the upside. And that was kind of the story of the DMI for today. Now, one of the things that we always talk about in the Nadra community is to stay focused on the rules that we have and the expectations we have around our references in our laws of market dynamics. And one of those laws is to look at the market and say, what's not happening based on the expectations that we do have around our trading and our framework. And yesterday was a good example of this market not being able to actually go imbalanced, even though this line in the sand was built around an imbalanced state or a trending type of state. So we weren't seeing that trend develop. So this bigger pullback makes a lot of sense for us in the overnight session coming into today's DMI. So not a big surprise there. It actually falls in line with what we were talking about in scenario 2 yesterday. So let's update our levels and talk about what we're going to do today. So now we're here taking a look at the overall landscape for us today, and that area that we were talking about yesterday is our line in the sand for the session here. So we're going to be monitoring this general zone for scenario 1 being a hold up above and a continuation to the upside. We do have kind of a neutral reference just before the overall major reference. Really, this whole kind of area can be considered one big neutral reference. It was a solid balance area from yesterday, and it's a good reference for us to have in terms of value overall in this market. So if we do come up into this zone here, that's kind of the expectation for the bullish move. And if we do break out above it, that's good information for us to continue with the upside and continue with the bullishness if we do get that. If that does happen, we can end up seeing a move all the way up into that 49.89 area. And then, of course, we do have some other neutral targets up above looking at the 50.13s, the 50.21s, and so forth. So that's the full picture of the upside with scenario 1 holding for today and possibly heading into a trend up above this particular neutral zone. Now, taking a look at scenario 2, if we end up breaking down, what we could end up seeing here is something along the lines of like this, right? It could end up going just below our line in the sand here and pulling back and then, of course, selling off. This would be our first destination. It would be a neutral-based reference. This is a value area that had built for a couple of days, and we're monitoring that for its traversal on the downside if we hold and accept below it. Now, any continuation to the downside is heading into this area here where we end up seeing our larger time frames be tested for their imbalanced states. So our expectation off the lower line in the sand is that we hold that area. If we do break it down or continue lower, well, that kind of opens up the ES to all kinds of situations where the bearishness would start taking over. And you can see there's a lot of open space below here. So essentially, if you got below this area, you'd be trend following to the downside pretty much all the way back into the 48.20s. So that's the overall landscape for today. The reason why I'm kind of looking beyond some of our immediate areas is simply because we do have FOMC today. So later in the afternoon, some volatility could come into this market for sure. Just pay attention. It is one of those, I don't hardly ever mention news at all because we don't really use it. We mind it, we trade around it and so forth, but we don't necessarily focus on news-driven trading. But as a trader, it is important to understand your news releases, when they're coming, and how they affect the market. And FOMC is a big one, so definitely pay attention to that today. For right now, our plan is bullish to the upside, and we're looking for that traversal across into this neutral area here. And we're looking for this area, this line in the sand area, to hold. If that breaks down, we'd look for the continuation to the downside to our first neutral target, and then maybe further continuation down into our main higher time frame line in the sand there. All right. Trade well out there, mind your risk, and focus on process. And remember, it is FOMC today, so pay attention to that as the day and the session develop.